Welcome to Short View Trading. This is your morning market hit for Monday, 1st of November. What matters today and this week for traders? Well, what a surprisingly strong week that was, with the S&P 500 up on Friday, albeit only a modest 0.2%, but closing at a new record high. And all of that happening despite the very sharp, aggressive backup in interest rate expectations across the globe. It's most dramatic and most marked we saw last week in Australia, with the 2-year bond yields reflecting that change in interest rate expectations, moving dramatically higher, as you can see on the chart in front of you now. Equally though, in Canada, you can see a dramatic repricing of interest rate expectations, as evidenced by the move in the 2-year bond yield you can see on the chart in front of you now. That's moved dramatically in Canada over recent weeks. And equally, you can make similar points in the UK and across many parts of the globe, with some of those central banks I just mentioned suddenly stopping their QE programs. And in that sense, the price action in the S&P 500 is all the more impressive, with the market making those record highs on Friday, as I mentioned. Now, of course, is the first trading day of the month and the beginning of a very favourable seasonal period of the year, with November and December both very strong months on average, as you can see on chart in front of you now. These 2 months typically some of the best months of the year if you look back to the average monthly return all the way back to 1987. Equally, if you used a median instead of a mean, you get a similar sort of outcome with November and December, both very good months, with the classic Santa rally coming up ahead of us. However, if you look at the models, the message is more mixed. Many of our models got a very clear sell signal. If you look at the steepness of the volatility curve, for example, you'll see a lot of complacency in prices, a clear sell message. In contrast to that, though, the risk appetite models, if you look at the combined RAG1 and RAG2 that we're putting up in front of you now, much more interesting, nice buy signal at that sort of buy level, more encouraging for markets. So the question is are we back in a risk-on regime, or should we heed the signal of many of these short-term models? And we address all these questions in our daily RAG, which is available to subscribers via our website. Equally, if you'd like a free trial of the Daily Rag, please click on the link below, enter your name and email address, and we'll send you the Daily Rag for free for 7 trading sessions. No credit card details required. So what are we watching today and this week? Well, there are a number of key themes. Firstly, of course, it's the big data week of the month. It's the first week of the month, so it's payrolls on Friday. ADP ahead of that earlier this week. And then, of course, we've got ISM manufacturing and non-manufacturing out of the States, as well as the manufacturing and service sector PMIs from Markit from across the globe over the course of this week. On top of that, there's a number of key central banks announcing their monetary policy decision this week. All eyes will be on the Fed. The Fed's the key one on Wednesday. It's expected they'll announce their tapering program. The press conference will be watched closely. Any description by Powell of inflation will be of key interest. We've also got the Bank of England, though, later this week, and it's expected they'll raise interest rates, as well as the Norwegian Central Bank later this week and the Australian Central Bank. Over and above that, the earnings continue out of the States, with a whole bunch of S&P 500 companies reporting their third quarter earnings over the course of this week, as well as various European and UK companies. So that's it from us. That's your morning market hit for Monday, 1st of November. Thank you for listening. Please do subscribe to these videos on YouTube. Simply search under Short View Trading, click on the subscribe button, or follow us on LinkedIn, Twitter, and or Facebook. Thank you for listening. Stay safe. Trade well.